All right, so I started recording here. All right, good morning, everybody. I'm Tim Eliason, and I will be your online instructor for the EG Tax Matters basic online class. We will cover a lot of material. Obviously, we meet once a week, so it does get pretty involved. If in the messages over there, just kind of getting a feeling, I know I've talked to some of you, but again, with the chat, if you go down to the toolbar at the bottom, you can click on the chat there, and that should open a little Zoom group chat. We'll kind of do that. I try to keep track of what's going on with everybody. So if you can pop in there, that if you haven't typed in good morning, so that I know that you have that, but if you could open up that chat. The other thing is, logistic-wise, I know I've had an email from a couple of you and talked to a couple of you that with the thumb drives, if you have any problems with those, you'll contact Bob on Monday. He's our IT specialist manager that will be able to do everything. Everything for the class was on that thumb drive unless we mailed you the books. I know we mailed the books priority, so I hope that everybody that was wanting to get a copy of the books has that. Okay. So, you know, we will be doing a lot of stuff off of the books. You'll see a lot of the stuff. I'll be sharing screens, various things throughout the teaching and everything like that to kind of go through stuff. So, and I hope everybody can hear me okay. I think my microphone, I tested it this morning and it seems to be working good, and hope everybody can see me all right. All right, so like I said, we're going to cover a lot of stuff. First thing I'm going to do is I am going to go through the syllabus. You should have received that as an attachment. So I'll be doing things like this where I'll be sharing the screen, and you know, hopefully it'll still just be me up in the corner, but sometimes other faces pop up there, so don't panic. You didn't lose me as long as you can hear me. Okay, so with that, but we can do various things on that, but a lot of times I'll be sharing screens like this. Like I said, this is the Tax Matters 2019. The way we teach the class is that we use the 2018 tax laws, which, you know, they changed for 2018 because of the Tax Cut and Job Act of 2017. But we'll be teaching you with the 18 laws, the software we have, everything like that. Obviously, there's some things that may be changing. In fact, last couple days, I was down in New Jersey for a National Association of Tax Professionals seminar, and 2 days of education for myself. I'll be sharing some of the things that we learned down there. But, you know, we drove in last night, so I didn't get in until early this morning, driving back from New Jersey. But we learned a couple things, some things that may be coming down the pipeline, new forms for 2019 and 2020. But we'll be talking about that as we go along, okay? My contact information was at the top of the syllabus there. There's 2 emails there. One is my EG Tax email. The other one is the online school. There's an underscore there that says online underscore school at egtax.com. Most all the emails that I will be sending back and forth and where you turn in your homework and such will be to that online school at egtax.com. Okay. A little background about myself. I sat in your seat. Well, it's been almost 10 years ago when I started working for Esther. So, but I started out with Esther here 10 years ago doing the tax class. I ended up working for her ever since. I worked at an office in Akron. I've worked in an office in Williamsville. I've worked one in, let's see, where else have I been? Lockport. And now I'm here in Tonawanda at the corporate office with her. I do the online teaching. I also teach a classroom session in Lockport. I do record those also, so you will have access to those, okay? So those are also classes that you will be able to watch also. And sometimes people get better absorption of the material from the online, or excuse me, classroom recordings because, you know, we're meeting twice a week and sometimes the material's not coming as fast, and those will help too, okay? Not only do I do the instruction here with Esther, like I said, I'm a tax preparer for her. I do a lot of the public relations stuff, speaking engagements, some of the online things. We started a branch called EG Health Connect, and I also do that for her with enrolling people through the New York State of Health and licensed to do Medicare. So we have a lot of things that we do here besides tax prep, but we all wear a lot of hats at the corporate office. As far as the course, it is a basic course, but it is going to teach you a lot. We're going to do, and you're going to learn everything you possibly can about a personal tax return. The 1040, most of you probably file a personal return, recently, or, have been or will be, or whatever it may be. But, we're going to teach you everything we can about the 1040 and all the things. We're going to teach you the tax law. Obviously, like I said, there's been a lot of changes in the law, but we're going to teach you that. And then we're going to teach you how to do the tax returns and how the forms work. We use a software called Taxwise that was on your thumb drive. We're going to teach you how to get stuff into that, things to do. I'll be talking a little bit of today. We'll do, a lot of administrative stuff, but we'll be talking about navigating around that. There's no prerequisite for this course. As long as, I guess you got to like to do taxes one way or the other, but, there's not really any prerequisites that you have on this. If you can do some math, and it doesn't have to be higher math. The computer obviously will do a lot of it. You have to, do different things on the forms to make sure they calculate correctly, but there's not a lot of things that you have to do that you have to have as a prerequisite, okay? If at any time you feel like you're struggling with stuff, I am here at the corporate office. I'm usually here, 8 a.m., sometimes earlier, until 9 o'clock at night, and sometimes later. I'm happy to have you come in if it's available to you to come into the corporate office. We have a classroom setting here, so it would be for you guys a learning lab, so you'd have the opportunity to sit down and, with me, and I can do some one-on-one with you if there's subjects that you struggle with, topics you're just not grasping, or, starting out if it's just a matter of getting used to the software. A lot of times people are very good with, reading the book, doing the quizzes and such through the textbook, but, sometimes the software gives them a little bit of a tough time learning how to get things in, learning how to navigate. I try to do as much time with that as I can, but, again, you're welcome to come in and sit down or sit in on a class. The classes run here at the corporate office in Tonawanda, or you can go to actually that address is wrong on there. I see what's on there, but actually we're at 1890 Colvin, so Boulevard in Tonawanda. Or you can go to the class, like I said, that I teach in Lockport, or there's one in West Seneca, okay? Again, the overall course goal, we just want you to learn basic tax prep. Some of you might be in the class just to learn more about taxes for yourself, especially with the change in the tax law, to say, hey, I want to make sure that I didn't miss something on my tax return. Or it may be the case that, you're looking for things. A lot of times we have everybody that does the class that ends up working for us. It's a great job. Obviously, it's during tax season, January through April. Being that we're located in Buffalo and most of our offices are in this area besides the ones we have in Florida and Arizona, it's a great thing to do when we have this beautiful weather in Western New York. What other things could you want to do but taxes when there's snow on the ground? So we hope that we get you comfortable enough that you will want to work for us. We discuss that after we get through the midterm exam that we have. And once we have that, we see how you did there. We have to be 85 or above on the midterm exam. And then we'll talk to you about the opportunities of working for us. Like I said, in Western New York, there's 28 offices. So there's a lot of opportunities there, okay? As I talked about, we'll be using that tax matters manual that you have. Pub17 is a big one. For those of you that used to go to the library and pick up your forms, Pub17, you can't hardly get it anymore. We'll show you, again, I'm going to show you some navigation on some different things, but I'll show you where that's available. It's available within the software, so you can see it there. But, you know, Pub17 is basically a slimmed down version of the tax code, okay? You know, the tax code has tens of thousands of pages, and obviously we're not going to cover everything that's in there, but we'll show you where there's resources. The book will have some things where it'll direct you to publications, different things like that. We tried to, in the textbook, to give you, you know, the abridged version as much as we could to be able to have you get the information that you need to be able to prepare tax returns, okay? Grading policy, it works a little bit different with the online class. I know they have here that we have 10% for the written midterm, the computer midterm, and the final exam. You know, most of it's going to be there. It talks about the quizzes and the homework. Second email I sent out had a thing about doing the homework, how to print to PDFs, things like that. There will be certain problems from the workbook that I will select and get have you send it to me as a PDF. That way I can see if you're understanding the law and getting the information into the computer correctly. There'll be certain exercises that I will have you send to me, the ones that I feel are most important, and then we'll be having you turn in the answers to the quiz. Most of the time what I'll just have you do is type the answers in the body of an email and send it to me. You know, we don't have to do anything fancy, you know, scanning stuff in, things like that. Like I said, most of the stuff I'll just have you type the answers in the body of an email and send that in to me, okay? The course is going to go 8 weeks. You know, it'll go by fast. Like I said, each Saturday we're together 2 to 3 hours depending on the material we have to cover and what want to cover. You know, there's some of the times that we'll be together all 3 hours. You know, if things don't work out again, where you can stay all 3 hours, you can only be here for a little bit. You know, it is recorded. You can come back and listen to it later. You know, just let me know that you're not going to be there. I do take attendance. If I see somebody that's missed a couple, you know, I will reach out to you and say, hey, you know, what's going on? Do we need to get together? How you doing? Find out what's going on there. Okay. All right. As far as the syllabus, you can see that each day we're together, we do cover a lot of material, okay? You know, today we're going to go through some things, like I said, logistically wise. You know, we'll do a little bit on the taxes and earned income and things like that and go through various topics there. But, you know, we'll cover a lot of stuff. There will be times that I may adjust the schedule a little bit, just based on what I feel the class is doing, how I see the homework coming in. You know, when we get down into the topics where we start to talk about things with capital gains, or we get down there into business income and rental income where we may have some depreciation in there, you know, I like to spend a little bit more time on it, just because some of the concepts that are there, you know, tend to be a little bit more involved, but you know, we want to make sure that you grasp the concepts and understand it. I always tell everybody, you don't have to be an accountant to do taxes, okay? You know, if you've balanced your checkbook or read a bank statement or done your own tax return, you'll be just fine, okay? You know, I try to simplify the topics and the concepts best I can so that everybody understands it. You know, that I just want to make sure that, you know, when we're done with a topic that we walk away and everybody gets it. I do spend a lot of extra time. The other thing too, if you can't make it into the class, I've always done this with my online classes in years past, is that I will do, you know, if you want to do a one-on-one Zoom with something, we can do that, very similar to what we're doing this, but we'll just set up a time outside of class and we'll do a one-on-one Zoom, and it's, I'll be happy to tutor you if it's the case that you can't make it into the office and you want to do it from the comfort of home, okay? At the end, you can see here that we have a bunch of people's names, problems, starting with Smith there. and gray, okay? And all of those there, but these are people's practice problems you're going to be doing. Obviously, they're not real people, but as you can see, there's a couple pages. You know, for those of you that will end up working for us, by the time that you're done with this class and get yourself acclimated to the office that you would work in, you'll have probably done in the neighborhood of 90 to 100 practice problems before you do that first live one, okay? So, you know, people always panic. I can't sit and have somebody watch me do this, or, you know, I'm just too nervous that I'm going to do it wrong or whatever it may be. But, you know, we make sure that, you know, if you decide to work for us, that you succeed and that you're comfortable with everything that you need to do. Now, obviously, we're not going to, you know, unless you feel that you can handle it, we're not going to throw you to the wolves, if you will. We're not going to throw you in and say, all right, here, do this guy's return. You know, he works, his wife's self-employed. You know, they own 10 rentals. He buys and sells stock. He's got 3 kids in college. We're not going to do that to you, okay? I know when I was a supervisor in the various offices, you know, I had clients of mine that I knew we could work with. I sat with somebody that was new to doing taxes that worked in my office and made sure the client said, hey, you know, I'd like, you know, this individual to do your return. I will be here the whole time, you know, alongside. So, you know, we're not going to take, if you will, the training wheels off and have you riding down a mountainside on your bicycle, okay? We'll make sure that you're comfortable. All right. Okay. All right. Okay. All right. And as I said there, you know, with the Zoom, just a little logistics around it. You know, I'll be able to share screens like that often so that you'll be able to see everything. The chat to the right, like I said, I like to keep everybody's mics muted for most of the time so that we can, you know, make sure, because it does get, and I will, you know, have sessions and times when we get done with materials that I will, you know, do, you know, hey, okay, if you'd like to ask a question or things like that. I want you to feel as much as possible like you're sitting in a classroom, okay? I don't want you to feel like, you know, you're off on your own and things like that. I want you to be able to interact. You know, you got classmates here, so we'll be able to interact as best we can with each other, and we'll be able to do that and be able to talk on all those things and ask questions and stuff like that, okay? All right. Let's see here. Give me 1 second. All right. Okay. All right. Mention the homework. One of the emails that I sent out to you there, I had on there that there was an attachment that says EG Tax Online Tax School Homework Procedure. Again, you know, you'll submit those to the email, the online underscore school at EG Tax. There'll be exercises and quizzes just in the body of an email. There are instructions on how to print to a PDF the tax returns. I will show you that. The homework that we have, I'll kind of, when I send it out, what I do is, like I said, I record these, and it takes me a while to edit the clip from the recording to be able to have send that link to you so that it's up on our YouTube channel, and you'll be able to see that there. But you know, when I send those out, it'll in there, and I'll have a due date. Typically, you know, I like to see them by 5 o'clock prior to the next lecture day. So, you know, obviously for us, that's 5 p.m. on Friday if we're lecturing on Saturday. It gives me time to look over and see how people are doing with things. You know, I can go back and say, hey, I see everybody struggled, you know, with this, entering this thing on a Schedule A or whatever it may be. And I can spend time at the beginning of class kind of reviewing things. We'll be reviewing some of the homework. We'll be going through some of the quizzes, things like that. So, you know, we'll review stuff a lot. It's not just turning it in and then moving on. I want to make sure that, you know, that each step you understand, because we definitely do the class as building blocks. We have you build off the basic return, you know, just putting in somebody's wages off their W-2, and then we keep adding things to it and keep building on it so that, you know, you'll have that to build off of. And if I don't have you with a solid foundation from the earlier chapters, then things that we do later in the class will be tougher, but we'll get you through it. But we'll make sure that you know, you have everything that you do there. Okay. All right. So that was an attachment that you had. Okay. All right, let me get set up on one thing. Give me 1 second here. All right. I don't know if you're like me, but I got way too many things going on the desktop right now. So, okay. Okay. All right, so I'm going to talk just a little bit about Taxwise. Once you're logged into Taxwise, this is kind of the screen that you'll see. On the thumb drive, you should have instructions on how to get in there. You'll be signing in there. Don't worry, you can't break it. All right, if you break your Taxwise, I will give you a new one. I'm not going to charge you anything. It's not going to be, I'm not going to dock you 10 points on your grade or anything like that. I want you to use the student version of Taxwise that you have. I want you to be able to play with it, okay? What I mean by that is that I want you to be able to go in there and do different things and try different things. I'll show you how to navigate around it. There's a lot of things that are modes that you can do and say, hey, well, what if I do this? What if I do that? In fact, believe it or not, it does have a mode that you can put a tax return that's called what if. So you just put it into what if and you see what happens, you know, different things like that. You know, like I said, the other thing is too is whenever you have a return open, and after you move to the next field, it is set up to auto save. So don't panic if you have your return close and you don't think that you saved it. It will either save each time you move between a field in the tax return, or it will save when you close the tax return. So you're not going to lose anything, okay? The one thing that I wanted to bring up, first of all, is I talked about Pub17. If you see these tiles across the top, we have a bunch of things that are up there that we have. And if you look up there in the top right corner, it should have a circle around it there for you, but there is the Pub17 that we were talking about. Okay, all right. So that Pub17 is what we want to do there is, if I click on that tile there, it's going to open up for me, and this will be a lot of things that you referred to in your homework and your readings and stuff like that. It'll open up your Pub17, and again, you know, this is really, you know, where you be able to find all your information. Unless you have unlimited printer, I know some people like paper. I just want you to note up at the top there, it says that, you know, it's 281 pages long, all right? So there is a lot of material there, okay? So, you know, some people like to have that paper one. It used to be that you could write to the IRS and they would send it to you for free. Not necessarily true anymore. You can download it, whatever you want to do to reference it. But we'll have a lot of reading. We'll refer to this quite often with things. The one thing that I want you to know is at the end, there is an index, and it works very well with it being on the software. So if I have something in here that I want to know that under letter B says something about babysitting. Well, let's see what page 45 has. I click on that, takes me right to where it talks about that, okay? So you will be able to use that index to go right to different things on there. You know, so anything that you have that you want to look up, you can look up in that index at the end. The index itself is 20 plus pages, 4 columns, pretty small little print. So you'll be able to find different things that you want to do there. You know, if you made a contribution to a blood bank, you know, you can find out if it's if it's going to be a charitable contribution. Okay. All right. Yeah, I am clicking on different things, just kind of moving around on the screen. Is everybody able to see the screen okay? Does anybody not see what I have on the screen?
The things that you're talking about, I don't see them.
Okay, let me see if I hold on one second. Let me share a different screen because it pops open in a separate one. Hold on one second. I hope that works better for everybody.
I see it now. Thank
Okay.
you.
All right. So yeah, sometimes when it's up on that. So this is the Pub17. I'm sorry, let me go back to it here. Okay. And that pops open on there when you click on the button. Like I said, 281 pages. At the end, there's an index. And like I said, if you wanted to find out for blood, if you decide to give blood, no charitable deduction for blood donations to, well, let's find out. And we go to that, and it talks about whatever that may be as far as the deductions, and I can find the material. Obviously, you know, different things will have you referred to as in different pages that we'll go to there. Okay. All right. Okay. Let me go back here to okay. A lot of the buttons up across the top, we'll talk about more so later on. But you know, you'll have a database, like I said, of returns and different things that you'll do there. And we'll talk about this in a little bit when we do some things that we do with chapter 3 that will be part of your homework. Okay. All right. So we have that. Okay. Okay, so we have that. All right. Okay, so let me get, for those of you that have the paper book, or I'm not sure what everybody's doing with that, I'm going to go to the book, and we're going to kind of get started with stuff. Let's see here. Give me 1 second to get the book open. Sometimes it takes a little bit. All right. Okay, give me 1 second here. Actually, what I'm going to do, be back just 1 second. I'm going to grab one of the thumb drives so I can talk about what's on that. You have a text message. You have a text message. Okay, the thumb drive that you have, that you got, should have everything on this. This is what the thumb drive should look like, you know, as far as everything that you have on there. You know, some of this stuff is for things that Bob may use to come in and help you, stuff like that. So, but this is what the thumb drive should look like for you, okay? And there is a spot there, if everybody has found it, is the student books. You know, he did put the Pub17 on there for you. Like I said, if you're doing some problems or you're in the software, you can find it, that you can go in there and, you know, go and see that Pub17, but he has it on there for you. We have the basic book. You know, as you go into there, we obviously have each one of the chapters that we'll talk about. And it has the workbook. Okay, and that will have different problems. As I said, you know, if you open up the workbook there. Okay, let's see here. Give me 1 second so I can share that screen. Okay, you'll have your, you know, your workbook, you know, that has all the different problems in there, and, you know, each one of them, you know, obviously we're not going to have a lot with chapter 1 and chapter 2, but, you know, we'll have some of the different stuff that's in there for the workbook, talking about how to navigate the software. Again, we'll be doing a lot of that individually, you know, doing different things on that, and we'll be going through this in a second, or I should say a little bit later. So, all right, and then, you know, you can see that each one of the times you have problems. You'll have an assignment that'll say, hey, you know, I have Michael and Rachel Smith, talks a little bit about, we'll give some bullets as to a little bit about them, things that they have that you need to put in there for them. Might have a little bit of a bio sheet for them, as far as information about who they are and different things like that, okay? And then, you know, you'll do some of those, and then, let's see here. When we get into problems where we have different things that we do, each step, the workbooks will have the little bit of a method or a little bit of a instructions on how to find different things within the software. Again, I'll be sharing the screen. I'll be doing a lot of these, you know, with you on that. So, you know, don't feel overwhelmed. And then we'll get, you know, you'll have little tax documents for your various people, if you will. You know, there's Michael Smith again, and, you know, works at Homes Unlimited, and we'll have W-2s, and we'll be doing problems that, try to make them as realistic as possible. But, that's where the workbook will have that for you. Okay. All right. And let me get back to. Okay. All right. Okay. Anybody got any questions at this point? And again, if you could, I know everybody typed in good morning and stuff like that, and I had mentioned earlier, has everybody's thumb drive worked okay? Anybody having any problems with their thumb drives, getting anything on there? I know we had a couple people that I've already talked to, but make sure that that's not. Okay, so Marty had something. All right, I'll make sure, Marty, that I get Bob to follow up with you here. Okay. Okay, all right, Denise, I got you on that one too, about the format of that. Okay, and again, thumb drives, some of you that may sign up a little bit later, just we'll do that. Bob has a way that he can share with your computer and stuff like that, so. Okay. So we have that. Okay.
No, I want to send it to.
All right. Down the link does not work either. Okay, Marty. Okay. All right, Marty. We'll have to make sure we get you straightened away there. Okay. All right. And Denise, yeah, with that formatting on there, we'll have to wait and see on that one. Okay. All right. Okay, so we have that. Okay, Ani has the same issue, all right. Okay, and I'll make sure that Bob gets in touch with you guys so that we can get that fixed. He's got a link to do some things that he can do remotely that he'll be able to do that for you, and he'll just arrange that with you, okay? All right. Okay. Let's see here. I think it's Gemma, is that right? There is a way to use it on MacBook. I don't know if anybody else is an Apple person. There is a way to do it. I will have Bob talk to you about that. He has a way to do that where it can be done on the MacBook. So I'll have him touch base with you on that. Okay, there's a, I don't know if it's an app or something like that, but you can use a MacBook to do stuff on there. Okay. All right. Okay. And I suppose in this day and age, you could probably be doing all your reading, homework, and everything on your phone or tablet or whatever. So that's just kind of the day and age we live in, right? So, all right. But I'll have him follow up with you, Gemma. Okay. All right. So what we're going to do is we're going to take about 5-minute break. I have that it is 9:48. We'll say 9:50. So I'll have everybody warm up their coffee. If you want to get your book ready in front of you to see what you want to be able to do, how you want to do that, we'll come back and then we'll get into the material, okay? If you have any other questions, just type them in the Zoom and you can do that. And, that we'll have that there. I print out all the Zoom things so that I can go back in case I forget what I talked to somebody about, but make sure that if you got, but like I said, 10 o'clock, we'll start doing the material here, okay? Okay. So what we're going to do, like the syllabus talked about, we're going to do chapters 1, 2, and 3. which sounds like a lot, but it's not too bad. There's, you know, if you took a look and you print it out, I know when we print for hard copies, for those of you that have a hard copy of the book, you know, we had to print it in a two, because if we put it all in one, it'd be such a big book, we couldn't hardly, nobody'd want to carry it, and it'd be too much of, you know, material to even bind. But, you know, there's a lot of material in the book. There's a lot of things that I'll kind of skip over, I'll reference. You know, the book is going to be a great resource for you. I know a lot of our tax preparers, when they're starting out with us, they'll have that, their textbook with all the rabbit ears and post-it notes and colored tabs and whatever else there for them to reference as they're doing their returns. You know, it is a great reference book for that. In the offices, we'll have things called a quick book. I have mine here. It's called a quick finder. It's a little book, looks like this. You know, it's got all the colored tabs and everything everybody can see there. You'll have resources that. Obviously, the Pub17 will be on there. So there's going to be a lot of things. But like I said, as far as the textbook, you know, we won't necessarily, you know, you're not going to listen to me read every page. I'm going to hit the topics that are most important. You know, I'll touch on some topics with reference to them. But a lot of the other stuff, you know, we'll kind of skim over. So, all right. So we're going to jump right in. If I can find, let's see here, where to go? I just had it. There we go. Okay. So we're going to jump right in on the book as far as, you know, the chapters and stuff like that. Like I said, the book is set up, you know, to kind of build off of things. You know, we just kind of talk about things. A lot of the stuff, if you've done your own tax return, you're like, yep, kind of done that. You know, we want to kind of stress some of the stuff that's important, you know, things like that. Just, you know, things sometimes, you know, obviously, you know yourself and you're doing your tax return, but when you're doing a tax return for somebody else and preparing that, it's certain details that you need to make sure that you're on top of. Okay. All right. Okay. So obviously the purpose of a tax return is to calculate and report to the IRS all your income received during the year. And obviously your job as a tax preparer is to see that we can minimize the tax liability legally and maximize the refund if they're due a refund. You know, obviously there's scenarios out there we'll talk about that typically people do not have refunds. First one that comes to mind is somebody that's self-employed, but we'll talk about that later when we get to that chapter. But obviously as a tax preparer, you're taking somebody's year-long finances as far as their income and things like that, putting it into a form and submitting it to a government agency called the IRS to see if they're going to get a refund and, you know, try to minimize things. You'll find as you go along that you become almost somewhat of a financial advisor. I'm going to talk about various things that you can do for people, maybe even your own return that you didn't realize, and things that you can do and say, hey, have you thought about doing this, or should you do that? I meet with my clients on a year-round basis. You know, I sit with them. Just so you know, I probably do in the neighborhood of 1,100 to 1,200 tax returns between personal and business corporate, you know, returns, some estates and trust. But, you know, those people, I tell them, hey, you need to come see me June, July, and August. I mean, as a tax preparer, I get a little lonely in my office. There's nobody here because they've all been to see me during tax season, but that's the time of year to come in and see me, or this time of year. Is there anything that we need to do before the end of the year so that we don't get caught off guard? Okay. Filing status is a big one. We'll talk about that, you know, determining which one is the correct by law and which one is the most beneficial. There are instances for those out there that are married filing joint, that sometimes you need to do a married filing separate. Again, the first thing that comes to mind is if it's anybody that has student loan debt. A lot of times to income-based repayment of student loans is much more beneficial to do a married filing separate. But we have to tell them, hey, this is what it's going to cost you. But we can evaluate that form. And again, I'll show you how to do that in there, okay? We need to determine if somebody needs to file a tax return. You know, sometimes when you get to be, and it's kind of a misconception, I have people come in that says, well, I'm retired now, I don't need to do a tax return. Well, if you have retirement income, it could be taxable. You know, Social Security sometimes can be taxable. So there are different scenarios. So, you know, most people must file a return. In this day and age too, if it's somebody, as I mentioned, I do health insurance, if it's somebody that is getting their health care through the marketplace, they may not have had to file a return by law, by the tax code, I should say, but in order to keep their insurance through the marketplace, through the New York State of Health, they have to have a filed tax return. Some people with the STAR credit, you know, if you don't file a return with the enhanced STAR, sometimes that can be something that then you have to prove that your income is such that you can get the STAR credit on your school tax. So, you know, filing a return doesn't necessarily just mean by IRS code and standards. Sometimes there's necessity to file a tax return outside of that. Which form to use? This used to be a little bit more, okay? Used to be the 1040, 1040EZ, and the 1040A. Well, EZ and A have gone. We just have a 1040. Just remember, our government said you could file your return on a postcard. You're going to find out that in order to file a basic return, if any of you may just been on vacation and we'll say that you went to the Grand Canyon, well, you could, you know, mail somebody a postcard, but would you take and staple 6 postcards together and mail it to them? Well, that's what the tax return ended up being. You know, the main part of it, yes, would fit on a postcard. But in order to completely file an accurate return, you almost had to do 6 postcards. It says there's schedules 1 through 6. Now, some of those are disappearing for 2019 when we start filing in 2020. I'll talk a little bit about that. There's some new forms that come out, some things that they've done, but they're still emphasizing that it can be on a postcard, okay? If you take a look at this, top half here, the 1040, okay? Bottom is page 2. That is the postcard, okay? The front and back of your postcard. Now, each one of these lines, you know, you start to look and pick things apart. You know, you look at line 12. Anybody that has kids, child tax credit, okay? Oh, that means I got to do something on Schedule 3, so there's another postcard to send in, all right? If they itemize, Schedule A, another postcard. All right, Schedule 1, you might have had some other income that doesn't show up here. Again, those are things that, you know, we'll talk about in all the different forms. But right now, we're down to 1 form. And actually, I apologize, there are 2 forms now. There is the 1040, and there's a new one that we'll be able to use for 2019 that is called a 1040SR, which stands for senior. The body of the return that you see in front of you here on page 2, a lot of the line items that are on that pertain to somebody that may be 65 and over and has retirement income from a pension, from a 401k, has Social Security. So they have done a new form for seniors. Again, it looks great on the paper, but you got to remember that 90 to 95% of people file electronically, so it doesn't really matter how the form looks when it's printed on a piece of paper. It's how it works when it calculates a person's tax liability or the refund, okay? All right, a little bit of helpful hints here about the different schedules. A lot of people used to remember the Schedule A for itemized deductions. That one's been around for quite a while, but you know, here's some of the different things. And you know, like I said, Schedule 5 and Schedule 6 are pretty much going away. We're going to use them because we're doing things with what we know right now. Some of the stuff that's coming down the pipeline for the change to the forms, we won't see till November. So as that stuff comes about, I will make sure that I email you PDFs about the changes, keep you abreast of things like that. I know it makes it kind of tough because you're thinking, I'm learning this and then it's kind of changing. Well, you know, we really did that last year because we had no idea what most of the stuff was going to look like for filing for 2018. and we had to try to teach people best we could. So I'll kind of teach you a little bit of parallel things between 2018 filing and 2019 filing, just so you have that information. Okay. All right. Schedule 1 that's here, again, a lot of this stuff that you see in here for additional income and adjustments, that used to be on the front page of the 1040. You know, they took it off there to make the postcard and put it onto this schedule where it talks about additional income and adjustments. You know, we see on there on line 12, somebody that's self-employed. And then not only do they have to do Schedule 1, but then they got to do a Schedule C to show that. So, you know, you can see that, yes, the 1040 itself shrunk, but it also created some extra layers and things flowing to other forms to be able to go on to that. So, okay. All right. Okay, so we have that. All right. We have adjustments to income down here at the bottom. Again, that used to be the bottom of the 1040 page 1. Okay. But those things are there. And again, we'll talk about all these, but it's kind of the forms. You can see Schedule 2. You know, obviously they're thinking about adding things here. We got lines 38 through 44 reserved. Well, they must be thinking about adding some extra tax somewhere. But, you know, 45, 46, 47, you know, those are just tax things that we had on there that, you know, had its own schedule. Okay. Non-refundable credits, again, bottom of page 2 of the 1040, this was all on there. These are the things that we get credits for with our children, our education things. Energy credit, you know, if we put in solar panels. Again, they flowed to a new schedule from a form instead of flowing from the form directly to the 1040. So this is kind of how they did everything. Talks about other taxes, payments and credits. Again, see a lot of reserve sections, so they must be thinking, and again, for 2019, there's a good possibility that some of those lines might have things on them, or as we go forward, you have to remember that the tax code that we're working on is set to sunset, as they say it, sunset on let's see, 2025 is the sunset for it. So that's what we have on that, okay? All right, so we have that, and then again, some other payments and credits. This was the interesting one, had its own Schedule 6. If you had a foreign address, it was on there. And then for ourselves, we had to do this schedule because Esther's tax firm is the third-party designee. So we would have to do that. And again, there's how we got from 1 postcard to 6 postcards, okay? All right. Obviously on the 1040, we talked about it. Most of the information now that is on the postcard has to do with who's filing. Their social security numbers, and information about their dependents. Okay. You know, the signatures that we have to do. Identity theft pins are starting to become more prevalent. I don't know if anybody's ever gotten one, but it's a 6-digit pin that if you've been a victim of identity theft, the IRS will issue you a 6-digit pin, or you can go to irs.gov and you can actually sign up and get yourself one. This is to protect you from having somebody file a tax return on your behalf. We do see cases of that. Again, we were just at a seminar the last 2 days, and there was an individual from the IRS that spoke, talking about different things that they're doing to prevent fraudulent tax returns. Somebody having a return filed in their name or social security number. But, you know, those are things that we would have that we do on that, okay? On 1040 page 2, obviously we get all the income that we have in there, you know, both earned and unearned, which we're going to talk about when we get into the next few chapters. Adjustments to income, again, that's where we're trying to lower that income before we calculate the tax. AGI, this is a term that you'll hear quite often. That's your adjusted gross income. That's where we take what you make and we maybe subtract things out. That's where sometimes you'll hear people talk about putting money into an IRA, a retirement account, and that'll lower their income. And again, we'll show how that works, and that's a little bit what I was talking about, that becomes where you become a little bit of a financial planner, okay? Deductions, standard deduction, you know, that is, you know, again, Standard deduction went up considerably with the new tax code. They were really trying to give everybody more benefit of the doubt. We'll talk about something called SALT that was in the news, not because it was restaurant week last week for SALT, but SALT because of state and local tax is what SALT stood for. Us in New York, for those of you that are property or own your own home and your property taxes, you may have saw where you were restricted on the amount of taxes that you could take on your tax return because of this. Again, they were trying to change that. And we'll talk about that when we get into standard deductions versus the itemized deductions. And one of the new things that they did, and we talked quite a bit about it the last 2 days, because this was a totally new concept for 2018 tax filing, and that is what they call QBI. It's qualified business income. It's a deduction that you could take, and if you're self-employed and you made $10,000 in net profit, after your expenses, and you could take $2,000 of that tax-free. And for those that own real estate also, if you were a landlord that you own property, you could do it there too. So, those are things that you can do for that. Okay. Page 2 again, talking about the tax, we'll talk about how to calculate it, the different methods. Most of the time people think of the little book and the instructions for the 1040 that you go down the columns and you look at your filing status and you put your income in there and it calculates your tax. There are other ways for that tax to be calculated depending on what's on the return. Again, we're going to kind of teach you that. We're going to look at refundable credits, non-refundable credits. That's how we get rid of that tax bill. Obviously, like I said, we're going to teach you everything and hopefully all the tricks that Esther's learned in 30 years of doing this with her business. All the little tricks to try to reduce that tax bill. Obviously, nobody likes to pay taxes, but it is a thing, and we have to make sure that for the clients or when you're preparing your own tax return that you're minimizing that. Okay. The 1040 will talk about tax already collected. Well, that's where when somebody's a W-2 and they've paid that withholding and they're taking that money out of your paycheck every week. You're paying tax, or if you're self-employed, you might pay quarterly taxes. We'll talk about those, and we'll talk about refundable credits. Obviously, those are the big ones that everybody loves because that's where your refund, you get money back, and refundable credits on the return really are the ones that become found money, if you will. A lot of people, tend to not realize that their refund is mostly made up of their money. It's where they've had withholding and they've put money with the government for the government to use, and then whatever the government decided it didn't need, they get back. So really they're just getting their own money back. Refund is not necessarily like, wow, we found $2,000 for you. Here's what the government is giving you as a gift. It's not. The government says, you know what? We didn't use $2,000 of the money that you gave to us throughout the year. Here you can have it back. And trust me, the government is not paying you interest on that money that's sitting with them. So we'll talk about that too, that we'll kind of go a little bit in depth and talk about, is it better to have a big refund? Is it better to have a small refund? How do we make sure that we keep money in our pocket with our withholding and we've met what we need to do throughout the year if we're having money taken out of our paycheck? Okay. All right. As far as the book itself, like I said, this is kind of a little roadmap. Some people love to have this. They'll print it out or they'll copy it, things like that. Really what it does is it goes in the order of things that you would see on the tax return. So on the 1040, the flow of the 1040 and the flow of the schedules that we looked at, this little roadmap kind of says to you, hey, this is the chapters. So some people, when they're starting out and they're doing tax returns, I'll see that they'll have this on their desk, and I encourage it, because if you get to that section, says, okay, all right, whoop, they got business income. I need to know that I can go to my chapter 13, 14, and 15, 13 and 14, they got self-employment or business income. That's where I can go. All right, and different things like that. So it's a great little roadmap. It's not really a table of contents because it's not in order by the chapters, but it is in order by the tax return. So it's a great way for you to kind of go through that. Okay. All right. The other thing too is you're going to get to know a couple families pretty good. All right. By the end of this, you're probably going to know, and apologize, I hope it doesn't confuse everybody, but we have Timothy and Michelle Boyd. Okay. All right. So we'll have those. And obviously they have kids, Thomas, Olivia, Brandon, Jeremy, Jordan, and Jasmine. And Jasmine, they just adopted. Tim is an engineer at a toy manufacturer. He does consulting work on the side. Michelle left her IT job. Okay. All right. And she's now running her own craft business. They own a vacation home and a rental property. Tom's decided that he's going to do some things. He's a graduate student. And Olivia is in college herself and works part-time as a waitress. Obviously, a lot of things on the table there, but these are the families that we're going to use and kind of keep referring to. And it says there, Timothy and Jeffrey Boyd are brothers, so his brother Jeffrey is married to Chloe. They have kids, Jaden, Braden, and Cindy. All right. And oddly enough, Chloe's mother, Angela, lives with them. And Jeffrey works as an IT advisor. So basically what we're going to do with them, obviously there's a lot of things. We're not going to throw it all at you at once, but you can see that we're going to use these families throughout the book. And these are, as it says, my tax matter families. And I'm going to take and I'm going to have and go through them, and I'm going to kind of build on them and add different things to their returns. Okay. A few little terms and little things on this. Okay. Again, I talked about adjusted gross income, AGI. You may hear us throw out the term modified adjusted gross income. Okay. Modified adjusted gross income really doesn't show up on the tax return per se, but it is a term sometimes that will be used for defining thresholds on different things. Okay. There are certain things in the income that we have to add back in to do calculations. So you'll see on some of the forms and worksheets that we'll do, you'll throw in there that they'll say that we need to use the modified adjusted gross income. One of the biggest ones that we see right now is those that have health insurance through the marketplace. To determine somebody's credit they get to help pay for their health insurance, they use their modified adjusted gross income. Best example of what we add back in is typically Social Security is not taxable, or a portion of it is taxable, but not all of it. And when we do something, we have to add the entire portion to get their modified adjusted gross income. Okay. The term generally is sprinkled extensively, okay, throughout this material and in official IRS documentation. So again, generally, if you think about it, starts with the same letter as gray. You know, it's a shame that the IRS uses generally in their context on their publications and things like that. But generally, that's where, you know, again, 99% you hear somebody say, but we're always going to talk about that 1% that says, but if this is the circumstance, this is what we will do. So it implies that there's one or more exceptions. Okay. So basically that's the IRS saying, hey, here's rules 1 through 9, but if you have to apply rule 10, then rules 1 through 9 don't apply. All right. I apologize if that's going to make things a little bit confusing, but that is kind of what happens with the IRS in their publications. Okay. And as it says here, this is not an official IRS document. Okay. This is not to be a substitute for anything, any of the resources that you have. So when we refer to a publication with the IRS or publication 17 or anything in the tax code, that is what has the final authority. Okay. We'll talk about things here, but as far as the actual tax code, you know, make sure that, you know, things that we refer you to, that you look at those publications and those instructions for the form, because that will be the final say on everything. Okay. And that's why it says IRS documentation is always the final authority. Okay. All right. Let me get the next chapter up here. Okay. All right, so now we're going to get into a little bit more of the tax code per se, okay? So we're going to talk about income tax return, the basics. As you can see there, each chapter starts off with the details. We're going to talk about filing status. We're going to talk about filing requirements. Let's talk about dependents. We're going to talk about support tests for a qualifying child. And we're going to talk a little bit about the heading on a return, the information that we saw on that postcard for that 1040. Okay. All right. And again, if anything comes up, anybody has that wants any clarification, just throw it down there in the chat. It pops up on my screen so I can take a look at it. Okay. Obviously, we're going to go through, we talked about the objectives. We're going to find out what is the correct filing status that is most advantageous for a tax preparer, or excuse me, taxpayer. Okay. Head of household. It's a term sometimes it gets a little confused. People come in and said, well, I file as head of household. Are you married? Yes. Well, then it's married filing joint, not head of household. Okay. Or somebody comes in and says, I file head of household. Okay. Are you single? Yes. Do you have kids? No. Well, then you file single. So head of household sometimes is a term that people will use because their income is the greatest, or they're the only person in the household, or whatever it may be. But head of household has a different meaning when you actually get into filing status. Okay. We'll be able to take a look at dependents, determine if that dependent can be on a return, if it's a qualifying child and qualifying relative. One thing I will say, the IRS loves the term qualifying. Okay. What I mean by qualifying is chances are when it says qualifying child, as it says there, there's going to be dependencies. All right. Okay. What that means is that we are going to have where we are going to get things that we have to pass in order to do that meet those qualifying things so that the child may be on the return. Okay. We're going to talk about a worksheet to determine support. And we'll talk about what you need to do to file a tax return. And we'll talk a little bit about the things that go in the heading on the tax return. Okay. All right. Like I said, each one of the chapters is going to have references at the beginning that we'll talk about, hey, in addition to what's in the textbook, our Tax Matters textbook, it may direct you there to read publications, things like that. So, when you see on there that we have at the heading that there is, okay, so as it says up here in the filing status, you look there in the red box, all right, it says, read Pub17, Chapter 2, filing status. Also take a look at publication 501, talks about dependents, talk about 971, it may talk about innocent spouse. These are publications that, we want you to know what they are and what's in them. Just because they're up there at the header doesn't mean that we expect you to read them page 1 to whatever. Some of them, get a little bit dry, if you will, but those are things that we need to have that says, oh, yeah, I need to find out something about dependents. That's at Pub 501. I need to go into that. Or, hey, does the Pub 17 with filing status, is there enough detail in there? Like I said, sometimes that is a condensed version of the tax code that we can go in there and take a look at that. Okay. All right. Filing status determines a lot of factors. Okay. Determines whether a tax return has to be filed, the standard deduction, the tax rates or tax due, and some of the eligibility for certain deductions and credits. So depending on the status that you choose, it will affect a lot of things that happen on that 1040 for you. There's 5 filing statuses: single, married filing joint, married filing separate. Again, I talked about head of household. Okay, that is separate from married filing joint or single or even married filing separate. Head of household has several different criteria that you have to meet that. Qualifying widow or widower with a dependent child, and we'll talk about all those. Okay. All right. Now, one thing I want you to realize is that according to the IRS, there is a different threshold for being considered married or unmarried. okay? What I mean by that is, in the eyes of the IRS, you can be considered unmarried, all right, if you do not live together after July 1st of a tax year, and if that person that does not live did not provide more than half the support for the upkeep of the home, okay? In the eyes of the courts, in the eyes, I guess, of the church and anything else that was be when you were married, that is a different definition than what the IRS says. So somebody can be considered unmarried in the eyes of the IRS. That would be different than what we traditionally think, okay? And we'll talk about that when we get in some things where we do some of the credits. There are things where sometimes that I will ask my clients and see if we can consider them unmarried, okay? Okay, so for the unmarried status, okay, it's in there in the Pub17, okay, but let me, since there's a question on that, give me 1 second here, and I'll read here what it says, and this again is kind of an abridged version, but I'll do this. You can do the head of household with being married, and you will be considered unmarried. A married taxpayer who is a U.S. citizen or resident during the entire year can file as head of household if all, again, this is all, of the following tests are met, okay? First, obviously, file a separate return because you're not filing a married filing joint return. The taxpayer paid more than half the cost of keeping up his or her home for the tax year. His spouse did not live in the home during the last 6 months of the tax year. When I say that, I mean not at all, okay? If I pursue this with a client where we're looking for this because it may be more beneficial, again, within the law, but it may be more advantageous to the taxpayer or my client, and we're going to do head of household, you know, when I say to them, did you not live together the last 6 months? And I will look across the table and I will say, not at all. Did he come over and fall asleep on the couch? Did he come over for dinner? Did he come over and use the bathroom? Was he in the driveway? You know, these are things the IRS may ask, and they may go to a neighbor and say, hey, did you see the spouse of so-and-so at the house? And, you know, if they're auditing him and that it says, oh, well, I did, you know, I think, you know, so-and-so went on vacation and the spouse was there for a week. Well, the IRS may say, hey, sounds like you guys are still living together, okay? Again, it's something that has to be done. And the last one is the taxpayer's home was the main home for more than half the year of his or her child or stepchild, adopted or foster child. The child must be a dependent, okay? So basically it says the tax court has said that that would be a head of household. So again, a lot of stipulations there that come into play, but that's where you can be considered unmarried and file a head of household tax return, okay? So I hope that kind of cleared it up for everybody. Single, you're considered unmarried. Again, when we talk about married couple, if one is head of household with the dependent children, then the other one has to file single because they're considered unmarried in the eyes of the IRS, okay? And obviously you're single if you don't qualify for any of the other filing statuses, okay? Married filing joint, okay? Usually, you know, and there used to be that they talked about a marriage tax, that you got taxed harder when you got married. Well, that's not the case. Actually, the tax rates are a little bit more favorable for married filing joint, especially versus a married filing separate, because there are a lot of credits that you would not be eligible for with the married filing separate. But, you know, it's always beneficial to do that married filing joint, okay? When you do married filing joint, everything from both parties must be included. There is something that you can do called an injured spouse. You know, again, we don't think of it in the sense of true injury. We're not talking about a black eye. We're talking about injured spouse. This is something you can file with a tax return. If two people get married and coming in, one person has past due taxes, child support, student loans, you can make sure that you file this form in 8379 to keep the tax burden from taking the refund of the married filing joint, okay? This is something I guess I will put on my counselor hat, but for any of you that have kids that are getting ready to get married or are engaged or even yourselves, you know, I'm not asking them to, you know, disclose all financial statements, but it's always great to know when you're marrying somebody, you know, what they're bringing to the table, because the last thing you want to do is sit down and, you know, the honeymoon's over and you sit down for that first married filing joint tax return and, oh, look, we got taxed less. We're going to get a $4,000 refund. And all of a sudden I get a call about May and says, hey, they took my refund. Well, you know, all of a sudden then it may be the fact that there may be some tax burden that one or the other brought into the marriage and the union and, you know, can end up costing the tax refund. And if it's not disclosed where we can try to head it off with an injured spouse, you know, it can make for a little bit of a tense situation, I guess would be the best choice of words, okay? You can take it a step farther with an innocent spouse. Again, married filing joint, and you file the paperwork for an innocent spouse. This takes it a step farther because basically what this is saying is that, hey, the one person had no idea about this, okay? As it says there, that innocent spouse, you know, we'll do these sometimes where we go back because we found out that somebody was self-employed, had their own business, and coming into the marriage and been filing tax returns. I always tell everybody the story. I guess I'll do stories quite often, so I hope everybody doesn't mind. But it's probably pretty unique that I am doing what I am doing in doing tax returns. Many, many moons ago, when my mother met my father had just come out of the military. And at that time, the military didn't really stress to anybody serving the country that they had to file tax returns. So my father had not filed tax returns for 10 years. As the story has it, my mother said to him, I will not marry you until you are caught up on your tax returns. So obviously I was not there to witness it, but he had to go back and file 10 years worth of tax returns to become current. Needless to say, I can remember every April looking at my father sitting at the dining room table, you know, grumbling under his breath as he was completing those tax returns, because I'm sure that he carried a little bit of a chip with that case. But now, all these years later, look what I'm doing. I'm doing tax returns. So, you know, those things are important. But what I'm showing you here is the fact that we do have some avenues to protect one or the other on a married filing joint return, okay? When you do a return, and it is a joint return, make sure that both sign it. We do run across instances, and it does really fall into fraud where somebody will sign for the other one because they don't want them to know what's on the tax return. Can't happen, okay? And also it talks about if there's one or the other of the parties that die during a tax year, they can still file joint, okay? So basically a joint return, whether you're married January 1st or you're married December 31st, you are considered married for the entire year. If you're divorced January 1st or divorced December 31st, again, you are considered single, all right? And that tax return, it doesn't matter when somebody passed during the year, they are still considered a joint return. Even if that person passed on January 2nd, they are a joint return for the entire year, okay? Really filing status is pretty much determined by the status at December 31st midnight. As I said there, you know, if somebody decides that New Year's Eve they're going to run off to Vegas and get married and they get it done at 11:59 p.m. on December 31st of 2019, they will be filing a joint tax return, okay? Married filing separate, again, oops, okay? Married filing separate is a status you can do. It's not filing single. It is married filing separate. The thing about it is once you do married filing separate, there are a lot of credits that are off the table. Your tax will be your income will be at a higher tax rate, okay? And there are a lot of credits and deductions that are either reduced or totally off the table, All right, we'll talk about that as we go along, and some of these credits are pretty substantial credits. Okay. We talked about the unmarried for the head of household, and again, married filing separate, you know, sometimes it is beneficial because of things that are in play with the income. We'll talk about how to look at that and evaluate it. There is a worksheet within the tax software that allows you to make the comparison for the client. So it's a little form that says, hey, you know what? If you guys don't file joint, it's going to cost you $1,800 on your refund. And then they kind of look at each other and says, I guess we'll stay together. Okay. So, you know, we'll talk about that. But also, like I said, most of the time that we see the married filing separate beneficial is on student loans. Okay. Head of household, if the following things are met, they are unmarried or considered unmarried on the last day of the tax year. They paid for more than half the cost of keeping up the home, and they had a qualifying person lived with them for over half the year. When we say qualifying person, most often we think of a child. Okay. If you qualify for head of household, usually the tax rate is much lower. The standard deduction is higher than that of a single or married filing separate status. Okay. Qualifying widow or widower with a dependent child. I'll let you look through that. Again, like I said, I've been working for Esther 9-10 years, you know, over 1,000 returns every year. I can probably count on my hand the number of times that this has come into the situation. It is beneficial in some circumstances. It's just one of those things that happens with it, but it's very rare that you see it, but it is a filing status. And if there is somebody that has a child that meets these criteria, where there's a qualifying widow or widower, it can be very beneficial for that filing status, but it is very rare. Okay. Here's a little worksheet. You're going to have some homework on this. So we'll kind of talk about it a little bit. But you know, as far as going through it, we'll kind of do some review of it when we get together next, when we talk about homework. But cost of keeping up a home, this is, again, when you look at that, you know, considered unmarried for that head of household status, which can be beneficial, you have to be able to justify, and as it says here, keep for your records that you provided more the cost of upkeeping of the home. Okay, so the amount paid that you paid and versus the total cost. Okay, so when you get there, if what you paid is more than half, then you are providing the cost of keeping up a home. Okay, all right. All right, here's a little thing that talks about you know, how we determine if a person is a qualifying child or qualifying relative. You know, this is when we hear, again, when we see that qualifying in front of something for the IRS, you know, we have to make sure. In this case, it's a qualifying child. It does get into it, is a son or daughter, grandchild who lived with you more than half the year and meets certain other tests. Okay, and they're single. All right. If he or she is married and you can claim him or her as a dependent, he or she are married and you can't claim him as a dependent, then that person is a qualifying child. Now, somebody's married, and I have had this happen, that they're married, but, you know, because of circumstances, they're still really a dependent. They're a qualifying person, but if you can't claim them as a dependent, then they're not a qualifying person. Okay, and again, there are some tests that we'll go through on that. All right, so, you know, this one really isn't that way. You're going to see it throughout the book. The IRS loves flow charts. Okay, those little things with the boxes, two little arrows. One says yes, one says no. You decide what direction to go. The IRS loves these things. Okay, they must spend a lot of time making these up. Okay, as I said, as we go through, when we get done with a section, we're going to have exercises. We'll assign some of these. You know, you'll sit down to do these, and we'll kind of go through those. You know, but these are things where you have to take a look at the situation and say, okay, you know, does this warrant which filing status? And as you see up here, you know, you fill in the answers on those, and you'll be able to do those as exercises as we go along. Okay. All right. Okay, filing requirements. All right. The filing status is determined by the marital status on the last day of the year. Okay. All right. So we have that. And as we can see, John and Mary Brown were married December 31st. They are considered married. Jay and Susan's divorce became final December 31st. They are both considered single the entire year. All right. And the marital status of a person who died during the year is determined as the date of death. So if somebody dies again on December 31st, okay, they're still considered married on the filing on the tax return. Okay. For a U.S. citizen or resident, okay, and when I say that, U.S. citizen or resident, and we'll talk more about this later, if being our proximity, if I have a U.S. citizen that was born here and has citizenship, but they're living with a spouse in Canada, they must still file a tax return, okay, if they meet the threshold, all right? But that's where that term citizen or resident comes in. Gross income, filing status, and age all play into that factor, okay? Whoops. All right. Now, this little chart kind of gives us some rough outlines as far as the filing status and whether they should or would have to file a tax return, okay? If somebody's single and they're under age 65, okay, then they will file a return if their gross income was at least $12,000. Now, this right column that you see over there, we'll talk about this a little bit more later, but this right column that we see, oops, hold on one second, excuse me. Okay, so this very right column here, okay? We're going to talk about it later, but those numbers are going to become very familiar to you, okay? Reason being is those not only are the gross income for the filing threshold, those are also the standard deduction, all right? So for 2018, those were the new standard deduction. So obviously, if we get done and we calculate somebody's adjusted gross income and we get to a certain level, okay, if that income, and then we take the standard deduction and we wipe all that income out before we calculate tax, that is that standard deduction, okay? As you can see on this, on that first one was single, if somebody's 65 or older, anybody that's over 65 gets a little bump in their standard deduction. So they get an extra $1,600, okay? So these numbers in the right column right now for us are our filing threshold. But those numbers, again, will become very familiar to you because that is the standard deduction also. And we'll talk about how the math works with that. Okay. So as you can see on here, if I have somebody that's head of household, they're under 65, again, we talked about that filing status, that $18,000 is now their threshold. So you can see one thing that's beneficial for head of household versus married filing separate, which $5, okay? They got $5 married filing separate. They got to file a return for taxes. So you can see how that married filing separate right out of the gate can be detrimental to the two parties involved, okay? As far as a taxpayer who can be claimed as a dependent on another person's tax return and whether they have to file, okay? If you look here, it's a little bit of a chart that qualifies as dependent on the return. If somebody is single, okay, all right. And if were you either 65, and if it's no, okay, which for most kids, all right. So we have this, your unearned income was over 1,050, your earned income was over 12,000. Those are things about whether you have to file about the dependency on the return. Okay, so take a look at those and you can kind of see on those, okay? Unearned income that we're going to talk about later and earned income are treated a little bit different on how they do to file that threshold, okay? And it talks about the different income levels, whether you must file a return if any of the following apply, okay? So again, these are things that are thresholds for that person that are children or dependents, whether they have to file a tax return, okay? Now, I will say, if you are a parent and you have a 16, 17, 18-year-old that can work, taxpayer, or somebody that's in college and they're working at Tim Hortons, and they're making some money, you know, they might be under the filing threshold for their age or category or whatever you want to talk about. But a lot of times they still want to file because they have been having withholding done, and they'll get that money back. So sometimes it is beneficial. They can still be on the parent's tax return for different reasons, as far as, you know, credits that may be there or education credits, but they'll still want to file because, you know, they might have had $500 taken out of their paychecks throughout the summer while they're working between college sessions, and they'll still want to file for that to be able to get that refund back. Okay. These are some situations that, you know, about who must file. Some of these are kind of sometimes unique situations that sometimes people forget about. They just think directly about that W-2 income or how much retirement income or whatever it may be. But sometimes, you know, in order to be eligible for a credit or for something so that you don't have a tax liability or something happened, again, I talked about the health insurance, you know, you still need to file. Okay. All right. Some few exercises that are in here. Okay. Again, you know, we're just kind of trying to make sure you understand the grasp, the concept are there. Okay. All right. Now, kind of talking about some other stuff that talks about here is, why should I file electronically? You know, a lot of people still want to mail their return in. They still want to do it on paper. It's very hard to get the paper forms anymore. Not even the libraries. Not even the IRS office down on Elmwood in Buffalo has the paper forms. They direct you to irs.gov. Okay? So, but electronically filing is much more beneficial. Again, if it's a security concern, you can help somebody with that 6-digit PIN. In the case of the state of New York, if you do not file electronically, you will be penalized $50. For us, that is $50 per taxpayer if they do not want to file, unless we can justify the reason that they did not file electronically. You know, if they didn't have access to a computer, or, I mean, you know, there's pretty extenuating circumstances in this day and age to not file electronically, but New York has deemed that if you don't file electronically, they're going to charge you $50. Okay. When do I have to file? You know, anybody that's normally on a calendar year, they have to file by the 15th of the following year. Obviously, it's just past October 15th. Some people file extensions to get that extra 6 months. Remember, though, when you file an extension, it does not give you more time to pay. It just gives you more time to get your paperwork together. Okay? If you don't pay by the 15th, the deadline, even though you're going to file your return 6 months later than extension, if you have a balance due, there will be penalties and interest. Okay? I'm going to talk about some things about records to keep, you know, what you can do with your refund, how you can look for it, how to do your change of address. If you made a mistake, you can amend up to 3 years later. Okay? Again, you know, something may happen. There's certain things that, you know, when the tax law changes, sometimes you want to go back and look at previous year's returns and say, can we apply this? Okay. All right. We talked about identity theft. All right. Okay. Now, this one is very important, okay, for any of you that have college-age kids. And I don't know how many times I go through this with clients that have college-age kids, but they're away from home. They want to get themselves out on their own for the first time. You know, generally, if their income's above $4,050, they're still going to have to file, but they would file a return. And if they do not check the little box that says they can be claimed as a dependent on mom and dad's, and they do that, and mom and dad come in to see me and says, okay, little Jimmy's going to be on the tax return this year. He's in college. We got that education credit. We got this, we got that. And all of a sudden I have to call them back and say, guess what? Your return was rejected because somebody already used that social security number on a return. And we have to call Jimmy and says, Jimmy, did you file a tax return? Yes, I did. You know, one of the kids in the dorm showed me how to do it on TurboTax or whatever. And all of a sudden we have conflicting returns. Now, granted, little Jimmy may get a bigger refund when he files by himself, but I guarantee that increase in his refund is not going to offset what it cost mom and dad for him not to be on the return. Okay, so again, we have to kind of wear our counselor hat, if you will, and say, you know what, Jimmy, we need to amend your return. We got to fix mom and dad's. So if somebody is a dependent, make sure that you check that box, okay, that says that you can be claimed as a dependent on somebody's return. All right. All right, so we talked about the fact that to be a qualifying child or qualifying relative, that there are certain tests that you must meet, okay? So when we look at that, you know, there's a dependency test, there's a joint return test, and the citizen or resident test, okay? Dependency test, a taxpayer who can claim as a dependent, you can claim the person on, you know, married filing joint, whatever be able to do. Joint return test, a taxpayer cannot claim a married person as a dependent. Citizen or resident test, a taxpayer cannot claim someone as a dependent unless that person is a U.S. citizen, U.S. resident alien, U.S. national. There are exceptions for adopted children. Kind of unique scenarios. We'll talk about those a little bit when we get into claiming some of the kids, but there are ways to do that. Sometimes when you're adopting a child, and that child is either from a situation or from outside the country, they may not have a social security number. They have to get a temporary, what they call an ITIN, individual taxpayer identification number is what ITIN stands for. When they do that, that's a temporary, that is not their social security number, but it may be the case that that's what you would have to use because either one of the parents did not want to release the social security number or they might not have one, but you want to put the adopted child or the foster child on the tax return, okay? There are 5 tests: relationship, age, residency, support, and that joint return test. You know, those are in that Pub17 that you can look at to be a qualifying child, and there can also be a qualifying relative. Again, when we think of relative, most of the time what we think about is the fact that mom or dad, mom and or dad, I should say, is living with us, or maybe we had, you know, we had one of our children move back in with us that had a marriage that didn't work out, and get on their feet, they're moving back in with us, they don't have income, but there's a child there, things like that. So we can take a look at the scenarios to see who we can put on there. As I talked about, you know, that qualifying child and qualifying dependent, you know, there's that flow chart. And, you know, as you do this, and what I will say about the flow charts for those of you that will be doing tax returns with us is that they work great. The fact that they do is for your interview skills, okay? Is it your son? Was that person under the age of 19 at the end of 2018? Or under 24 and a student? Or are they permanently and totally disabled? Okay, yes. Provide half of his or her own support? No, okay. Who isn't filing a joint return? You know, again, these questions. Did they live with you for more than half the year? So these are questions that you can do. And as you get done with all these, if they meet all those conditions, as it says here, do you have a qualifying child who meets the conditions to be your qualifying child? If yes, then you can go to step 2. If no, you go to step 4. See if they're qualifying relatives. So again, you know, stop. You can't claim a dependent, you know, because of the question that was asked. So kind of read these, and as you're doing the exercises, kind of put them through this little flow chart and answer the questions, and it'll kind of give you a sense of what the tax law may be to help you out, okay? All right, I got a few exercises here that we have. And again, we want you to really understand, because this is the root of it all, that filing status. It determines so many things when we go in to do all those tax returns, okay? Now, this is one that everybody will have to really understand the concept. We put this worksheet for determining support. We put it on the little forms folder that we have on everybody's desktop to use for the tax year. What this is it'll be exercise for you. It talks about John and Sue's mother lives with them, and it goes through here, and really pay attention to see how they calculate to decide whether they can claim Sue's mother, Jean, that lives with them, okay? And it talks about going through the support. You can see all the different things that Jean's mom has as expenses and what they may do, the expenses for the household, the expenses for the person you support, and then you can kind of see where you get done here, and you can say that, you know, based on what these numbers show, do they meet the support test? Well, then I can put them on there. Great little form to have, like I said, on your desktop and be able to use, because sometimes somebody will say, hey, you know, dad passed, mom moved in with us, can I claim mom as a dependent? Well, let's take a look. Let's look at these things that we have here that, you know, are funds that belong to mom and that you say that you're supporting. You know, what are your expenses for your household? You know, expenses for the person you're supporting, what does she pay out of her own income? And then you can determine whether that person can be on the return, okay? Okay, a little help in the hint box here, because sometimes this gets a little bit fuzzy as what goes into income, but these are the things that you want to put in there that, you know, and if you look at them, you know, they're really things that, you know, that somebody might have. They might not be filing a tax return, but these are things, again, that you would have to put into that gross income to determine that, okay? And then you get to do one on your own there, and we will definitely be going through this next session, okay? I want you to see if you can get through the problem, looking at the example and doing the problem yourself there, but we'll be definitely going through that, okay? All right. Okay, qualifying child of more than one person, all right? Sometimes a child meets the relationship, age, residency support, and joint return test to be a qualifying child of more than one person. Although the child is a qualifying child of each of these people, only one person can actually treat the child as a qualifying child and take all of the following tax benefits, okay? So basically what this is saying is, in the case of separated parents, it may be the case that they say we have 50-50, okay? We are joint custody, all right? And, you know, everything is split right down the middle, 50-50, okay? Unfortunately, in the eyes of the IRS, that does not mean that both parents can take the child as a qualifying child, all right? It talks about the tiebreakers here, all right? To determine which person can treat the child as a qualifying child to claim these 6 tax benefits, the following tiebreaker rules apply, okay? If only one of the people is the parent's child, the parent is treated as the qualifying child of that parent. Biological, okay? Somebody can't say, well, we have joint custody, but it is not that person's child, okay? Basically what this is all saying when you read through all this in these tiebreakers is that the IRS does not believe in joint custody. They basically believe that there's 365 days in the year. That is an odd number, and they cannot divide it by 2, okay? So somebody has to, because sometimes they, you know, the parents will sit there and say to me, well, you know, it's 50-50. You know, I get it half the week and they get them half the week. You know, where does the kid sleep most often? You know, you have to go through this, you know, tiebreaker situation, and it's unfortunate, but there is that case. And again, you know, it's the case that with these, and as you read through these, that it is difficult because only one parent can claim the child. Now, there are ways for the kid to be on both tax returns in kind of a way, and I'll show you that. But by right, you know, a child can only be on one tax return for all those credits, especially the child tax credit, okay? Which right now is, you know, $2,000. Now, if somebody can be claimed because of the tiebreakers as a child of somebody else's, that custodial parent could fill out the form, an 8332, and give the claim of the child to somebody else, okay? So basically what I'm saying is, if my wife and I are divorced and she is the custodial parent and the kids live with her, so, you know, but in a tax year, every other year, we get to claim the child. She fills out this form in the odd number of years and gives it to me and says, you may claim our child in odd years, okay? So that I can get the benefit of the child tax credit on my return. Now, I cannot file head of household because I'm not the residential parent. The child does not live with me, but I can file single with the child on my tax return. Okay. As far as the tax return, the heading, okay. Again, pretty straightforward. We'll do some exercises. We'll be into that shortly. You know, you're going to be putting first and last names. I will say for people with hyphens, make sure that they're both on there. So if somebody has a hyphenated last name, but the big key is you want to make sure the name that appears on the header of the tax return matches what is on the Social Security card. I've had newlyweds come in. They're doing a joint return. They say, yep, we're both last name is Brown, and I'll put it on there and their Social Security number, and the return would be rejected. Well, the IRS looks at the Social Security database and says, no, the spouse's Social Security number and that last name don't match. Well, they got married, but she or he did not get a new Social Security card and change their last name with the Social Security Administration. So always make sure that's the case, okay? All right. Okay. All right. We have a little bit of here with the W-2 for Susan Miller. And that person handed us the W-2, and we were able to pull the information off there to put it on the tax return. You can see where the W-2 went in there on the 1040. Again, calculating of the tax. All right. Dependent. Again, we'll go through a lot of these. Some of these are just exercises for you to go through so that you can kind of get a grasp of what, you know, and again, we're going to have you doing them by hand and the exercises in the book. Okay. All right. Okay. What we're going to do. All right. So, like I said, we cover a lot of stuff. A lot of stuff we'll rehash when we get into the problems themselves. Okay. All right. So again, we're going to take about 10 minutes. Everybody can stretch their legs, get their eyes back after bugging out looking at the screens, you know, things like that. And then we'll do a little bit from chapter 3 and get in, show you a little bit more inside the Taxwise. So I have 11:10, so we'll resume at 11:20 to wrap up the day. Okay. All right. So we're going to continue on here. Like I said, you know, most of the classes, you know, I have it set aside for myself, 9 to 12 for the Saturday morning class online. Do record these, but, you know, a lot of times, depending on the content of the material, sometimes we will go the entire 3 hours. Sometimes it might be a little bit less. We do record, so, you know, that you can go back and review this. So with things going on, realize this time of year, you know, got to get to the pumpkin patch. It is apple season, whatever else is going on. So we want to make sure you don't miss out on all that fun stuff. You know, or let's see, it is, the Bills are at home. So some of you might be heading to tailgate to the Bills game. So we'll be able to get you out of here so you can get to your tailgate for that Bills game that's at home. So, all right. So what we're going to do, we've covered a lot of stuff. A lot of stuff we've done so far has just been definitions. So, you know, as far as outlining the filing status, you know, all the different tests. Again, some of the material we'll go at pretty fast and furious. But every single return that we do, the things that we just talked about, we're going to be rehashing and going back to. Does this person meet the married filing joint, had a household? Is this a qualifying child because of their income? Can we put mom on the return? We're always going to be coming back to all these concepts. So, you know, for some people, seeing the definition in black and white on the page, you know, they get it, okay? For some people, they're practical. They need to see it in actual live action. So what we're going to do with this chapter is I'm going to go through a lot of the definitions on stuff, and I want to spend the last few minutes when we're together in a tax return in Taxwise, so I can kind of show you both how Taxwise works and some of the stuff that we're going to learn about in chapter 3 and we've seen in chapters 1 and 2, again, to see it in practical application. All right? All right, so chapter 3, we get into defining our income. And hold on one second, I missed my button. There we go. Okay, so I missed my button there so I could share the screen. All right, so chapter 3, we're going to start talking about earned income. All right. Just because I'm using the term accounting periods doesn't mean I expect you guys to get done, and when I give you your diploma that you're all going to be CPAs. It's just where we talk about the different periods that relate to what the dates are for the tax return. We're going to talk about wages, other income, talk about the W-2, talk about, obviously there's a lot of people that work in a restaurant setting, tip income. We'll talk about a little bit about military and disability pay. I do quite a few military people, whether they're retired or active duty. As it has it, my wife is a 20-year military veteran of the Army, retired in 2010. So have a background in a lot of that. So I do end up with a lot of the military returns and things that are handled, whether somebody's on active duty or they have some disability or whatever it may be. And we're going to talk about a little bit about determining that tax liability. Okay. All right. As we talked about, we're going to talk about accounting periods, when a tax return needs to be filed, explain what earned income is. Okay. And I will stress, you'll hear me say it just like that most of the time. It is earned income. Okay. And that is a special form of income. All right. Just because it's money coming into the household doesn't mean that it was earned income. IRS has a different definition of earned income than what we may think about. We'll talk a little bit about the W-2s, talk a little bit about excess Social Security if that's paid, what to do if somebody doesn't receive a W-2, how to take care of tip income. Okay. You know, we'll talk, like I said, about military and disability and a little bit about tax liability. Okay. All right. Now, this is where we talk a little bit about accounting periods and get just a little technical on things. Constructive receipt is when income is available to the taxpayer regardless of whether they actually in their possession, and constructively received. Basically what we look at is we are on a cash basis, okay? What that means is when did the dollar change hands, okay? I may have my pay period end December 31st, but the check was actually not deposited in my account until January 5th of the next year. So that means that income is in the following tax year. Even though I may have earned it in the previous, it did not really change hands from my employer to me until it was put into my bank account, okay? So we're always going to be on a cash basis. If you're self-employed, you know, you made a widget for somebody, you sold it to them, when did they pay you? All right, well, you made it in December of 2018, but they didn't pay you till January 2019. That means that, you know, is in 2 different years because we're on a cash basis. You bought the materials in 2018, but you didn't receive the income till 2019. So those will be reported that way. Okay. As far as accounting periods, calendar year, January 1st, December 31st. That's really all we're going to pretty much worry about. You won't see, and we won't talk about fiscal years. It's just here as a definition. because, you know, that's where we may get into a corporate return or a partnership or whatever, where they might have their year ending differently. We talked about apples, okay? It may be the case that because of when they're busy with their apple orchard, that they decided, well, we're going to do a fiscal year because this is our down quiet time. We just don't have downtime to file on a calendar year. We have downtime at a different point. So we're going to do a fiscal year so that it fits when our year is, okay? Accounting methods, again, I talked about the cash basis. That's really what we're going to be focused on. It shows some examples there. The other one is the accrual basis. We're not going to do that. We're really not going to use that. That's where income is reported in the tax year that it is earned rather than when it is received. So opposite what I was explaining, I made a widget for somebody in December, sent it to them and billed them, okay? That's when I earned the money, okay? So then on an accrual basis, I would report it then. And then if they pay me in January, doesn't matter. On accrual, I'd already reported it the previous year. We're going to be doing the cash basis, okay? Filing dates, again, we talked a little bit about this. April 15th of the following year. So December 31st, 2019 is the end of our tax year this year. And the filing will be on, let me take a look here, make sure, yep, Wednesday, April 15th, okay? Sometimes depending on, you know, what day the 15th falls on, that may, you know, adjust it a little bit, and it would be the next business day. So if the 15th was a Sunday, we'd be filing on Monday, April 16th, okay? You can do an extension. Again, does not give you more time to pay. It just gives you more time to get the paperwork together, okay? And then as it says there, if you don't get it done by the date, then there's those penalties and interest, and the IRS will definitely charge you that, okay? Fiscal year, it normally ends, when you do a fiscal year, on the 15th day of the 4th month after the close of the year. Well, if we apply that to the calendar year, the 15th day of the 4th month at the end of a calendar year is April 15th. So you can see, same window, it's just the fact that if we do a fiscal year, it just, we don't center it around April 15th, okay? All right. It has the form here, the 4868. I will stress down here, whoops, okay. 4868 is pretty minimal as far as what the form is. There's not a lot to it. But if you take a look down here in the corner, this part 2, basically you're doing a real condensed version of your tax return. You're saying, hey, I think I'm going to owe, you know, $5,000, all right? And I only had $3,000 taken out of my paycheck. I better send in $2,000 with my extension so that I don't owe, you know, when I do my return and then have interest and penalty, okay? So I stress on the fact here, you look at line 4, you think, I'm going to owe about $5,000, but they only withheld $2,000, or I only put $2,000 in. That means that I better send $3,000 to the government before April 15th so I don't have interest and penalties. Okay, so that's really what an extension does. People that have refunds, an extension really doesn't do them any good per se. You know, it doesn't really change anything. It can benefit you in some ways if you have, you know, the at the end of the 3 years, because if you do an extension, you get some extra time for that 3-year window to amend. But really for the refund, if somebody has a refund coming and an extension, you know, other than telling the IRS, hey, I wasn't quite ready, I got some more paperwork to get together, but I'm going to have a refund, is really what they're doing there. Okay. All right. Got some exercises there. Okay. Wages, salaries, and other income. All right. Income can consist of money, property, or services. Earned income, okay, consists of wages, salaries, tips, professional fees, and other amounts received for pay for work actually performed, okay? It's earned income, okay? Again, you did something to earn the income. And I stress that it is earned income, all right? Unemployment, even though that is income, and it is, you know, when you're out of work, but it's for, you know, whatever, that is not earned income. Social Security is not earned income, okay? You know, if you have a self-employment, that's earned income. But I cannot stress enough that it's earned income, all right? It gives us several examples here of things that you can consider that are earned income, all right, that we have on there. Excuse me, that wages are referred to as an employee's compensation, include everything received in payment for services performed. It includes, but is not limited to, and again, these are all things that we have there. One that I will stress on there that the IRS has really cracked down on is the one that's there in the middle, and that is gifts that are there, okay? So if I look at this one right here in the middle, okay, all right. If the boss gives you tickets to the Sabres game, and he gives you 4 tickets, he gives you use of the box, and he gives you his preferred parking, that is now considered income, and they really crack down on that, okay? So that being said, that will show up on your W-2 now as income because the employer is taking it as an expense, all right? So if you've wondered why somebody that you work for is not as generous as they used to be with all the Tim Horton gift cards, all right, maybe why? Because a lot of that stuff now has to be reported, and they've really cracked down on looking at that and making sure everybody's reporting all those things, okay? Scholarships are on here, all right? Stress scholarships, if somebody has excess money that comes back to them from college that is not covering any of their qualified education expenses, then that would be, you know, income that they have to say on their return. So if somebody got a scholarship and all their stuff was paid for and they got an extra $1,000 that they got to put in their pocket on a scholarship, yep, then that is taxable income, okay? Obviously, everybody knows what a W-2 is, okay? And we see this when we've worked at a job and we've been paid, and they're paid weekly, bi-weekly, monthly, whatever it would be. We get a W-2 at the end of the year, and we have this W-2, and, you know, actually several copies are filed, but, you know, some come to us that we have that we either, you know, in the days when we did paper, certain ones went with the federal, certain ones went with the state, kept some for our records, some go to the Social Security Administration so we get credit. But all the copies are exactly the same. They're going to have information on there about the employer and the employer's name and the employee and the employee's identification number, which is the Social Security number. It's going to have wages on there, what was withheld on taxes, obviously our Social Security and Medicare that's taken out, our Social Security tips. So if we talk about that, box 10 that's there, that one's very important because if somebody has a flexible spending account where they get money towards daycare for a child while they work. We see this a lot from Geico. They do a nice job of on their W-2s of reporting that they give their employees, you know, $2,000, $3,000, $4,000, sometimes $5,000 a year towards dependent care for child care. And it doesn't have to be just a child. Dependent care can be mom or dad. Maybe you take mom or dad somewhere so that they can be there while you work during the day, and you know, they'll get benefits for that, okay? All right, whoops. You know, the W-2 has a lot of the boxes. We'll talk about these boxes, 12A, B, C, D. They have specific codes that they will have. Best example is a D code. If somebody's contributing money to a 401k through work, it'll have a D and it'll show how much they're giving. If they're putting into a health savings account, might be a W in there. So there's things there. And then obviously 13, they kind of check what type of income this is. If somebody was receiving some disability, that would be third-party sick pay, okay? The other one, this is where you might see your Sabres tickets listed in there because sometimes they really don't know where to put it. But if you got those Sabre tickets as a perk and then they show it as income, so you end up paying tax on it. So if you do get Sabres tickets, they are playing well. Enjoy the game, but realize you're probably going to pay tax on it. Other things that show up in there are state disability, and new for the last few years, the New York paid family leave often shows up there, okay? And then down across the bottom in box 15, this is where all the state information. Now, you can have somebody that might have multiple states down here where they work for an employer but they're working. Say that somebody works for a highway company. They might be, stationed in Ohio for a while, or Pennsylvania or New York, and some of their wages are earned while they're there, and they may be taxed on a local basis. So you might see multiple states down at the bottom, or somebody moved with a company, okay? Talks about the parts of the W-2. We kind of talked a little bit about that. Excess Social Security. What that is sometimes what happens is somebody takes out Social Security, and there's a limitation on the wages and how much Social Security can be taken out. Social Security tax, anybody that makes over $128,400, that's where it stops, and they don't have to pay in more than $7,960, okay? That is from all their employers. Sometimes what happens, though, is that they will do that incorrectly, and that number will be incorrect. So if you have one employer, you got to go to that employer and says, hey, you got some extra money you took out of there that you gave to Social Security, I need it back. Or sometimes say that we have a doctor that makes $100,000 working at one hospital, moves to another hospital, and now they made another $100,000. Well, they got $200,000, and each $100,000 had the withholding taken, but when you put them together, okay, then they gave too much Social Security. Well, that Social Security, that excess Social Security, is recaptured or you get it back on the tax return itself, okay? Some of the other boxes we talked about, Medicare wages. Box 12, there's a great little chart down there that talks about all the different codes. Remember I talked about D there. If you look there in alphabetical order, money out of a 401k, okay? Perhaps you're doing, a deferred comp program. That would have a different code. If you had non-taxable sick pay, so short-term disability, that might be a J on there, okay? Like I said, W is another one we see often. You have a high deductible plan for your health insurance, and you contribute to a health savings account. Well, that would be a W. A lot of the things that show up in box 12 are really pre-tax dollars, lowering your taxable income, and or they also, when they appear in box 12, they will flow to another worksheet or another form that you would use on the tax return. Okay. The other one that is not as important as it used to be, but the DD, cost of employer-sponsored health insurance. Having that DD code would be a way that we could prove that somebody had health insurance, so they would not have to pay a penalty for not having health insurance. Okay. Talks a little bit about box 13. Statutory, we'll talk about later. Kind of way that does. Statutory employees are kind of unique. They get a W-2, but they're really self-employed, and then we'll talk about, when we get onto the Schedule C, how we handle that. Retirement plan, important that box is checked, because there are some things where excess contributions to retirement accounts, or if you're married, it gives you the options to maybe do something for your spouse that may or may not work, or may not have a 401k at their job, and it shows the credits or the limitations that you might be able to get credits on for contributing to their retirement. Okay. One thing, and we'll talk about this, box 14. One of the things that comes in there is this thing called the 414H retirement plan. Okay. That is a state, New York State has this for their retirement. If somebody contributes to that, it is tax-free on the federal, but it is taxed on the state when you make contributions. So we have to make sure that that's handled correctly for coding on that. Okay. All right. We see some W-2s here, and again, these might be some things where we pull some information off for exercises. You see the income that's out of there. Again, we got James Jones and, his home sales and his home's unlimited. We can kind of see where his income comes from, and kind of take a look. Does he have excess Social Security tax withheld? If that's the case, that's going to show up on the tax return. Okay. And again, that excess Social Security a lot of times will be used just for one individual. If it's a married filing joint and their income and it's excess Social Security, just because the two of them add up to, it's not. It's for an individual excess Social Security. Okay. All right. Substitute W-2. If an employer does not receive or is unable to get a W-2 from an employer, then there's some other things. You can do a substitute one. If you file and do a substitute W-2 that's put back in by somebody else, the IRS does not take this until after February 15th. That's a fraud thing. That's to make sure that that W-2 is not fraudulently made to misreport income and give time for the employer to get their W-2 in for everybody, okay? Tip income. As it says here, ideally a tipped employee should report the entire amount of his or her tips to their employer, okay? And, the state of New York and the labor board, labor, whatever you want to call it, labor department, have really cracked down on this. So they have made sure that employers are doing much more due diligence with their employees that are tipped to make sure that they are reported correctly on either the W-2 or that somebody's completing the 4137 to be able to report tips that maybe were not reported to the employer. All income earned must be reported. So whether, it's cash tips or tips on a credit card or whatever it may be, okay? As it says here, tips not reported to the employer are still subject to income tax and must be reported on the tax return, okay? All right, so we have to make sure on that, okay? And as it says here, an employee is not required to report the employer tip income of less than $20 from any one job during a calendar month. If you have somebody that is working and has a job as a bartender, we'll say, and in a month they receive less than $20 in tips, they don't have to report that. Well, in this day and age, I would guess that that's a bartender that is not very good at their job because they're not receiving any tips because $20 is pretty minimal threshold, okay? If they did $20 or more in cash and charged tips in a month for any one job and did not report all those tips to their employer, they must report for Social Security and Medicare taxes on their tax return. So they have to do that 4137, okay? All right, so that's where that comes into play. All right, and on a W-2, you can see here for Randy Lewis, he's working at the Lamp Post restaurant. You can see that boxes 1, 3, 5, and 7, okay? Now, 7 and 3, all right? Okay, 7 and 3, those will add up to what's in box 1, okay? So we got Social Security wages and Social Security tips, all right? So that's where we would have those, all right? Okay, now in the case of, we kind of have here at the Lamp Post restaurant, we're back with Randy Lewis, okay? This is where we would report on the 4137 as it says unreported tip income to create the Social Security and Medicare tax. Again, this is where those wages that we earned, that we're reporting them on the tax return to make sure that they are taxed, and especially for this Social Security and Medicare. For a lot of people that maybe, bartending is their profession, they do it their whole life, and, they don't want to show too much income because they don't want to pay taxes. They kind of like having that big, roll of tips come in their pocket going home each night. The one thing you have to stress to them is down the road, if they don't pay into the Social Security system and they don't pay into the Medicare system, they're not going to get to use it. Like I said, I do health insurance, I do Medicare, have an individual I am working with that was kind of semi-self-employed for several years. He did not pay into the system, so he does not get the free Medicare Part A when he turns 65. He's going to have to pay for it, okay? Just because you turn 65 doesn't mean Medicare is yours because you're a 65-year-old person in the United States. You have to pay into the system, and you have to do it for at least 40 quarters or 10 years. So this is a way for them, and same thing with Social Security. Some people that have been self-employed or work in situations like this with tips, what do you mean my Social Security is only $500 a month? I should get more than that. Well, no, you didn't pay in. This is what we have reported, okay? And this form helps that go to Social Security, okay? All right, and then we have some things, and again, we'll go through this again next week where we'll do the exercise on the forms here. I want you to kind of read through them and get a chance to do them with what you have on there, okay? Military pay, we talked a little bit about that. You know, things will be designated. On the states, a lot of times, you know, military pay is tax-free. On the federal, they'll still tax you, but there are ways to back out pay that was from active duty. In the state of New York, believe it or not, somebody that may be stationed at the Connecticut Street Armory downtown, if it's designated such, they would be active duty. You know, so it's considered a combat zone sometimes with the way that their W-2 is originated from the Army. So, you know, they don't have to pay tax on that money in New York State. Okay. All right. And again, you see all the different things that can be excluded from income based on, you know, depending on what their status is, their duty, active duty. Sometimes it depends too, because you might have somebody, especially with their proximity to the Air Force Base in Niagara Falls, is that somebody is here and is stationed there, but as they consider what they call their home base or their home, you know, whatever the station, home station, I guess is what the term is they use, might be somewhere in Colorado. And so they're here, so that makes a difference on how their income is handled because of where they're stationed and where they're from, okay? Disability pay. The one thing I want you to take away from disability pay is that it is not taxable if the employee paid for it, okay? Best example, the duck, Aflac. Okay, so if you have where you paid into the system and you had a disability policy with Aflac that you paid for, that is not taxable income when you have that personal injury or sickness and you miss work. If it's something that the employer paid for, then it will be taxable. It will show up on your W-2. Okay. All right. As far as determining tax liability, most of the time it's pretty straightforward. We do use the tax table, and then that gets us the rate, or, you know, gives us the number that we have. But just remember that the income, okay, is basically your income subtracting the standard deduction, and that is your taxable income. Its income is, or excuse me, tax is determined off of your taxable income, not your gross income after standard deductions, okay? So your tax is not calculated until after you subtract the standard or itemized deductions, okay? All right. Talks a little bit about the tax table, has some exercises here where you're going to go through and do some, you know, determining of how the stuff goes on to the forms, okay? All right, so what we're going to do, all right, we got some stuff here. Oh, since I didn't do it on the other ones, there's at the end of the chapters, there are some quizzes there that you will go through. And again, you know, I'll assign those and see what we have for answers on those, okay? All right, so what we're going to do here is, give me just 1 second. Okay. All right. Okay, so we're going to take care, and we're going to do some stuff here from chapter 3, and we're going to kind of do a little bit of run around in. Okay, so 23, 25. Okay, let me just get set up here. So if you want to get your workbooks out, and we're going to be looking at page 23. Like I said, in the workbook there, okay, So what I'm looking at in the workbook here, give me 1 second. All right, so I'm taking a look at chapter 3. Like I said, in the workbooks, you know, it talks about a lot of different things here, but we're going to kind of go through how to get in, get a tax return started. You know, I know the previous chapter, you know, has some of the stuff where we have some different things. Let's see here. But we're going to kind of do a little bit of a twofold here. All right. There are some things from the previous chapter about all the different forms and stuff, but like I said, I'm going to try to do this with a problem from chapter 3. So I'm going to kind of go through one. I'll be sharing the information here with the tax return and stuff. I'll be sharing the screen for you. But what I'm looking at, and again, a lot of the stuff that you see here, I'm going to kind of go through because I want to kind of have you see me do it in Taxwise. Talk a little bit more about Taxwise, getting in there. Oh, there we go. That's the page I was looking for. Okay, at the bottom there of page 3-5, I'm sorry. I was looking at the page numbers, but 3-5, there's a problem for Michael and Rachel Smith. So we're going to take a look at that, okay? Okay. All right. So once you log into Taxwise, this is a screen that you're going to see again. You know, we talked about the buttons across the top. A lot of them are not lit up at this point, you know, because we're not using them until we're inside of a tax return. You know, some of them, like I said, up here on the top right is that Pub17, that there's a reference for that. We got open returns. Most of the things right here under the magenta circle, as they call it, the EG logo, says tasks that you do most often. That's really where we're going to start inside that, okay? So what you're going to do is we are going to click on Start a New Return. Because of the database that I'm in, yours, it doesn't matter, but I have to use, I found a blank return, and I'm going to use that. It's a fictitious number, okay? So once I type that in, well, let me go back here, okay. All right, so you're going to click on Start a New Return. It'll bring up this square for enter your Social Security number. You'll enter the Social Security number. In this case, it would be one that is on the little bio sheet that is in the workbook for you about Michael and Rachel Smith. Actually, their bios in chapter 2, not chapter 3. But we have that in there for them. But you'll type that in there as it's showed there. If there's a return that's already made for them, it'll show. That'll have on there. But then you have to rekey the Social Security number to make sure you got it right. And then you'll go in there on that, okay? Here too, you can open an existing return. If it's one that you worked on and you know what, somebody called you, said it's dinner time, well then you can go have dinner and come back and open the return, and again it'll save right where it's at. Change user, pretty much you guys, there's instructions Bob had given you as to how the user is that you use, and change package, what that is. And again, you know, if you want to get in here and fiddle around a little bit, it shows some of the other returns. We're only going to ever be on the 1040. I might show you some things here about things that come from these forms that go to the 1040, but for right now, you know, we're just going to be on the 1040 there, okay? And again, you know what? You get in there, get a feel for it, play with the software. It's not going to file a return by accident, so the IRS is not going to come arrest you because you're filing fraudulent returns when you're doing these. It's not tied to a number that would allow you to electronically file. So don't worry that, you know, you're doing things. Get in there, use the software, play with it, see what the buttons do, see what this does. Like I said, I'm going to try to show you as many things as we do stuff moving around as possible, but, you know, play with the software. You break it, I'll give you a new one for free. So don't worry, okay? All right. So we're going to kind of talk a little bit about, okay, so this one I had in there, it's because I had to find a blank one, okay? So don't worry that Social Security number is not the same, okay? Now, when we get in here, again, everything in Taxwise is form driven, okay? So even the information sheet here, you know, again, this is stuff we're going to put on that'll be our header, but you can take a look. This thing on the left is called a tree, okay? So over here on the left is what they call the form tree. I am a huge form tree fan, okay? So this little thing over here on the left, I put in the red box, that is a form tree. It has a social security number, has all the different information, all the forms that I'm using. You know, obviously, if there's a blue check, that form's in good shape. If there was a red exclamation point, I have something I need to address. You know, simply you look at the main info, I got a bunch of red boxes because I haven't put anything in. So that's stuff that's on there, you know. So I love the tree, okay? Little blue box up here, refund monitor, all right? This is the thing. Some of my clients, I tell it about it, and some have realized that it's there. When they take a look at it, they're up there, and you can hear their breath get short as they watch the refund monitor go up and down, okay? But they have to realize it's there, so. Okay, and I don't know if everybody saw in the chat though, but it looks like Mary had talked to Bob maybe on Friday, and it looks like we're supposed to use, is that, Mary, is that student all capital and then dash? Yep, okay, so there's some other buddy, okay? So student dash 2018. So student in all capital letters dash 2018. Okay, so that is the password now. All right. So that is in the chat there if anybody wants to take a look at it. So the word student, all capital letters, all right, dash 2018. Okay. So we're in there with that. Some of these other things we'll talk about along the top, but for right now, the other thing is too, is make sure when you're doing the tax return that you have your cap locks on. It's a little nuance with the electronic filing system that, you know, it's best to have everything done in all capital letters. Okay. So I am going to kind of go through some of this. I have Michael. And let's see here, his middle initial, A. All right, and we got Smith. Okay, so he's in there. His address, and again, I'm not doing the spouse in this case with Rachel. I just want to kind of go through it. But Michael is 1234 Union Road. Okay, and as far as navigating, I don't know how many of you are tabbers, but for me, I'm a tab person. So each time I'm hitting tab, it's moving me to the next field. So when I was up on this line and I hit the tab button, it moved me down to the next line. Zip code wise, you put in the zip code, it'll fill in the city and the state for you, okay? Always make sure you put the email addresses in there. For us, you know, we cannot electronically send somebody a copy of the return unless they have their email address on file. Daytime phone number, again, you know, that one's tough. Most of the time, cell phones, daytime, evening, they're all the same phone number, okay? So, you know, whatever number that they have, you know, that's what you're going to put in there, okay? Date of birth, again, very important. We'll talk about that later, that it's accurate. Because there are certain things that with their birth dates, there's thresholds for things that they may have to file or may have a penalty or something like that. Best example is taking money out of a retirement account before you're 59 and a half years old results in a 10% penalty. So you need to make sure that you do that, okay? All right, so this person's 51 years old. And looks like we're going to say he is a builder working for Homes Unlimited, okay? As we go down here, you know, like I said, sometimes we do returns for U.S. citizens living in Canada, so the address would not go up here. It would go down in the foreign address, all right? Your software should be set up with defaults. One of those defaults is our excluding Puerto Rico income. Again, you know, doing 1,000+ returns every year, I don't think I would need my hand to count the number of times that I've did somebody that had anything to do with Puerto Rico income. But it is on the tax return because of the status of Puerto Rico as far as the U.S., okay? Right here, this is where, you know, if somebody's totally and permanently disabled, or if one of the spouses died, that's where you put in the date of death, okay? First big question, and it's the thing that we talked about in chapter 2 and somewhat in chapter 3, but mainly in 2, is that filing status, okay? Is this person filing single, okay? Married filing separate. You notice if I check the single, all right, all the other ones go away. If I do married filing separate, I do have to provide the information about the spouse, and it's going to ask me questions. Did they live together? Okay. And then it says, if yes, did you or your spouse live together at any time after June 30th, 2018? Okay. Sounds like those questions we talked about. Are you married? Are you considered unmarried in the eyes of the IRS? All right. As you can see down here, if I check out a household, I have if the qualifying person is a child but not your dependent, enter them here. So again, had a household with qualifying person, we have to make sure that's the case. All right. If I do married filing joint here, it's probably going to tell me up here, hey, where's all the spouse information? I can see the red up there. Okay. We're going to do some returns where we talk about this. This is where we put in the kids, the information here. Okay. This little box right here, this is the one that I talked about that's so important. Okay, hold on one second. Okay. This is for those returns that we're doing. Right here. So if we have that college student that's on our tax return, then this is where we got to make sure we put that on there, because you can be claimed as another person's return. So if I have a college student that I'm claiming as a dependent, when they do their tax return, they need to make sure that they check that box. Okay. All right. We're going to talk a little bit about this more later. We'll go through the boxes when we do some of the dependent stuff. So I'm going to kind of skip over that for now. This box right here is defaulted in there. Again, it's New York, but if you have somebody that lives New York and Florida, obviously, well, Florida's not a good example because they don't pay personal income tax, but they live New York and Iowa, you might put both states in there. Or you got to file a tax return because the income earned in Ohio, but you're a New York resident, you might do a non-resident, might put OH here for a non-resident for Ohio. Okay. Bank information we'll talk about a little bit later. Okay, so that's pretty much it on that. Driver's license stuff for right now, just check the box, they don't have it, and then check the first box. So check this one here, and then check the first box over here, just to pretty much get by that. Down here, what you'll do is, the first time you're gonna have to fill this all in, but once you type in your initials, it'll populate with everything else that's on there, and then you'll put in the date of the return. Okay. All right. Now, what we're going to do real quick is I want to kind of do a W-2. And again, the beginning of next class, we'll be going through some problems. All right. Okay, so on my tree on the left, I got two ways. The W-2 is here, and I can bring it up, or I can go add a form. See my little tabs up here? Okay. So if I am on my main info, or if I'm on my 1040, and you can see it lit up blue, this is my 1040 with the information that I've already put in, okay? But if I'm here, I can go to my tab up here or hit Control F10. I think I sent everybody a little cheat sheet with keyboard shortcuts. So if you're a keyboard person instead of a mouse person, you can do that, you know, with navigating around the return. We have the add a form, all right? Once we're on that, you know, right now you can see all the different forms. You know, there's the federal going all the way down. And then at the bottom here, we start looking and we see NY for New York and all the forms, okay? So we have all these different forms. So I can scroll through there and look for them, or up here where it says look for, I can type in there and put W-2, okay? Once I do that, you can see down here at the bottom in red, I got a wage and tax statement, okay? I don't use the find a form a lot. I just like the tree, and I know where the forms are and stuff like that. So I like to go through and do it that way, okay? But anyway, we're on our W-2, and we have in there that we had this information. The top one on page 3.6, we're going to put in. Michael is our taxpayer. Okay. Always check this box and make sure the address that is on here matches the address that is on the W-2. So you have to make sure that that matches. All right. If it doesn't, make the changes here. Just because you change the address on the W-2 form in the computer, it will not change the address for the tax return. Okay. So you just have to make sure you do that. All right. We're going to put in here at the bottom, we're going to put the EIN number that shows up for Homes Unlimited. And we have 162. All right. And as you can see, that employer's number was in there. So here's how Homes Unlimited has the information. In this case, it was in Lockport, so we'll put Lockport's zip code in there. All right, red box usually indicates I'm looking for information. So I'm going to put that in there, okay? And as you can see, it calculated my Social Security wages, my Medicare wages, and my Medicare tax withheld, and my Social Security tax withheld, okay? And then on this case, he had $4,235 of withholding, all right? Okay, so if we look up at the blue box in the top left, we can see our adjusted gross income's in there. Right now, because of what's in the return, he's getting all of his withholding back, okay? The little box here that's red, check with withholding, you can just check that box there, okay? We talked a little bit about this, the 414H SUB. If it's somebody that has contributions to that works for the state, that may be doing that state retirement, we have to make sure, but it has to be coded that way. And we'll talk about that a little bit later. You can see down here, there's New York withholding. At the bottom of the W-2, we can put that withholding in there, okay? All right, and, excuse me, put that ID number and that withholding in there. All right, so we got a W-2 in there, okay? And as soon as we put that in that document, if we go back to our 1040 page 1, shows all of our information that we put in there, okay? Our 1040 page 2, there shows our income. Okay, in this case, we had the box checked married filing joint, so that's why he had no taxable income. If I go back, and let's check his box is single. Okay, so we come back to that 1040 page 2. You can see here I had his income, subtracted his deduction, had his taxable income. Using the tax table on 11A, we have his tax bill. We had that this is his withholding. So based on that, there's his refund, okay? All right. So that's kind of the basics with getting stuff in there. We'll do a lot more of this, especially at the start of class. We're gonna do a couple problems next week before we get any farther, but I want you to just kind of get into the software, see what you're doing. Like we said in the one subject line there, that or the chat, I should say, is that you had that new password to get in there. So. Okay. All right. So, anybody exhausted yet? Hey, those I can see that I can see your hands. Anybody's hands going up, going, my head's spinning already. Okay. You'll be fine. We'll be doing this, like I said, what I just did, we'll be doing over and over. You're going to hear me talking about W-2s. I'll be going through the main info. Like I said, a lot of stuff today was administrative stuff just to get you introduced and everything like that, okay? So, you know, that's all right. Your head will stop spinning by, well, let's see, the class is done December 14th, so usually it'll stop spinning by about then, okay? But basically what I'm saying is what we did today we'll be doing over and over and over again, because every tax return we do starts with that filing status, starts with that main info sheet. Most of the time starts with a W-2, getting their income in there, getting the kids in there and all that stuff. So we'll be doing a lot more of that, and then we'll be all checking all that. Okay. All right. Well, we ran a little bit long today, so we wrapped up there a little past 12. Like I said, we had a lot of administrative stuff. We'll be getting out there. I'm going to see if I can get rid of that password for Zoom, but if not, I'll make sure to send them out both together. You know, usually it just has to be that 9-digit number, so we don't have to worry about having a password, but I'll see what I can do on that. But most of the time you'll see that, by 8:30 or so. I'll send that out. I got everybody in my phone as far as a text group to be able to send it, and to emails, so we'll make sure on that. Like I said, if you want to come back and review any of this, usually by late Sunday, I have edited the clip and have everything up there so you can watch that. I also do put my lectures. I will start lecturing in class this Tuesday and Thursday, both in the morning and night. So I record those, so you'll have those to refer to too. And then I'll send links to everything, so you don't have to worry about searching on YouTube looking for the video. I'll just send you a link. You click on it, you can listen to it. Again, I know it's not that exciting, and I don't have that exciting of a voice, but I'm going to try to make it as fun as I can for everybody. Okay? All right. Well, thank you, everybody. Again, if anything you're not comfortable with, email me, text me. You got those. Get those to me. Homework, I will send out the homework, send out, because I want to kind of take a look and kind of see what I want to do. I don't want to overwhelm you. The big thing I would like you to do, and just, obviously we had some information, but I want you to really work on those problems in chapter 2 and 3 in the workbook, so that you get used to Taxwise, because all the tax knowledge and the tax code that we learn, I want you to be comfortable getting it into the tax return to see it in action. So really what I want you to stress, if you want to do some stuff this weekend, is getting your Taxwise going. If you haven't, I apologize. You have to talk to Bob on Monday, our IT guy. But really what I want you to do is get in there and play with the tax return stuff and go from there. Okay? All right. Well, I'm going to end the recording.